All money to IRS is never fun. Know how to handle it, know the consequences, and understand the statutory limitation. That would definitely help. In the next 30 minutes, I'll explain that to you. Now, let's talk about how did IRS get the collection started? IRS only do collection. Basically, they think you owe them, right? They think you owe IRS, so they're here to collect from you. So in what kind of cases can you end up in that way? So number one, if you didn't pay your taxes when you filed your return. So that's the common one. So you got your tax return done, and you realize that you have to borrow money to pay taxes. I mean, folks, if you ever get into that kind of situation, I really question whether your tax return was done correctly or not, because our tax system is not designed for someone to borrow money to pay taxes. Of course, there are people just spend, being irresponsible, so they end up in that situation, which I understand. And I particularly just recently saw a taxpayer. They gambled so much, but the gambling ground here in our state, they withhold the state taxes. They didn't withhold any federal, so they ended up owing like $33,000 on federal taxes. So you think the IRS is not fair, or you should have that withheld, right? So that is the first cause, because you file taxes, says you owe, you didn't pay. The second one is you didn't file. You didn't file, but IRS has income in their system. They didn't know you can deduct all these expenses. So they did what they call the substitute return. They did a return for you. Hey, you don't file, that's fine. I file for you and you owe. So that's where you got your tax due. So normally if you don't file taxes, but you end up due taxes, that is because the substitute return did not take into, say, your home mortgage and your home office expense and stuff like that. So it didn't consider that, just treated your income, that's all. Then the other reason is did not match. What did not match? What you filed and what IRS has did not match. And if that doesn't match, of course you're asking to be audited. IRS already got your W-2 information, and here you come in and you accidentally put a $10,000 too much on your federal refund. IRS will go after you. So that will be a collection, right? Then you got audited. Whether you get audited by federal government or audited by the state government, and whenever you got audited, your income went up, and that is when you owe taxes. So that's where the collection would start as well. So that's kind of the four main reasons. Of course, there's many other reasons, right? There are reasons like people were using your identity, working in California while you live in Minnesota and stuff like that. So, but these are the main reasons why IRS start collecting. So the collection general process is what? It is not a call. It is not a fax. It is not a text message. It is a letter. So IRS only start collection with a letter. And that letter is CP14. If you notice on the top right corner, it will say that's a collection letter. And in the letter, it will tell you. So the letter will explain the balance due and what you pay in full, and included the tax amount, give you the breakdown of penalty, interest, and you incurred. And on the sort of the bottom, not really the bottom, the bottom part of the notice, it will tell you that on what day you have to pay, then the balance is the right one. Otherwise, the interest and penalty will be more, right? So that is the general process. You get a letter. And very, very new, that CP14 letter now come with a barcode, okay? Not barcode, come with a QR code, the square one. So what you do is you use your iPhone and you can picture that QR code. It will bring you to IRS website, allow you to make a payment arrangement right away. And if you cannot set up a payment plan and make a payment arrangement, it will give you the contact to Taxpayer Advocate Service. This is where the committee I was talking about, I'm serving on the national committee. That national committee, one of our job is to make sure that to work with Taxpayer Advocate Services and to help taxpayers. So it's a volunteer position, but this is where, again, that QR code will give you directly to that Taxpayer Advocate Service place in your local area. So if you live in Des Moines, it will give you the Walnut Street, give you the number, I think is 407, the office number. So you will go in and you can actually resolve that there. So basically 3 options. You either set up the installment plan through the QR code, or you pay it in full through the QR code, or you talk to Taxpayer Advocate Service. So that's the general process. Improved general process. We don't have the QR code before, so now we do. Okay. Now let's talk about, is it worth to owe IRS? The answer is no. So we can just finish this webinar now knowing that it's not worth it. Why it is not worth it? Number one, IRS charges the interest that is compound daily. So let's say you owe $1 and your daily rate, let's say it is $1. And so the first day you owe $1, the second day it is already become $2. Then the third day it is the $2 interest. So that's $2 already. So you become $4. So the interest is compound daily. I just want to illustrate what that means when people talk about compound. Compounding just means it doesn't calculate from the original number. It's calculate from the lump sum number with the interest penalty already in there. Then it's rolling up, compounding, okay? And also there is a late penalty for the late payment penalty every month. That's not daily, that's every month. So imagine all of these add together could be as high as 25%. So you may want to figure out other ways to finance what you owe to IRS because it will be cheaper. Let's say if you have a way to get an equity loan from your home, maybe that's only 5%. So that will be a lot cheaper than what IRS could offer you. And then you also save the fees for them to set up the installment plan. It's not free, they charge a fee. And I actually forgot to check to confirm the dollar amount, I think is 120, and there is a fee. So you want to make sure that you calculate all of these overhead. Then you conclude that, okay, maybe it is better to just find alternative financing method to pay. Even if paying by credit card, the credit card interest might be lower than what you will pay on interest plus penalty. Then of course, the fee I was talking about, you can also work to abate that, not abate that, to get a waived for that fee or reduced for that fee. So there is general consensus is that it's not worth of IRS if you don't have to. But if you have to, you have to. We have solutions in the back, but here, and we say that from the dollar amount is not worth it. And here, to make an installment agreement, I have this link already here. I will go through IRS website with you when I finish all these slides. So we cram them together and you can see how I search IRS website. And there is a form here called installment agreement request. You just write down 9465 if you're afraid of, or just take a picture of my slides. And this is the form when you owe IRS. Don't wait for IRS to come to you and send in this form already. Tell IRS that you want to do an installment payment. And so that way, as long as there's an installment payment going on, as long as you pay all your taxes later on time, and your installment will stay there for you, and it won't change. The IRS bother you, and you just got a summary at the end of the year to tell you how much installment you paid. It is really a quiet, not troublesome process once you have the installment put in place. The troublesome process is when people keep on getting new tax dues coming out. Then the installment agreement just null and void. You start all over again. So that is what really difficult for people who couldn't really keep the promise of installment payment. That's understandable. Let's say if you have a business or you suddenly fell ill, where are you going to have the money to pay, right? So installment payment agreement can be broken. It is okay to break it because you have a situation, but the thing is, it is difficult to re-establish it. Now, what if you're just one of those people who has a very unstable income? There is no way you can promise IRS $500 a month. You don't even know whether you're going to have a $500 a month. So here are the options. Number one, you can establish what they call the partial payment installment agreement. And this is particularly done when you have a tax you owed 5 years already. So you only going to have another 5 years to pay. And I will soon mention to you about something called statutory limitation. IRS collection has a statutory limitation. They only collect for 10 years. So let's say you owe 5 years already, you just have 5 years left. And you know that this 5 years you would still under disability, you won't be able to pay. That's the time that you go back to IRS, ask for, they call that partial payment installment agreement. You don't have to pay the full payment. You do partial. So maybe you owe 10,000, you do 5,000. So that is something you can work it out. Okay. So that's one way to not pay installment and pay something later, but work on to the partial. Number two, it is offering compromise. So a agreement between you and IRS that resolves your liability by payment of a £3 dollars. Say you owe 58,000 and you did this OIC process. IRS agreed. Okay. You just pay $1 on the 100. Then suddenly you have $580 to pay. Okay, so that is where you will come in to negotiate a dollar, penny on the dollar or dollar on 100, and whatever ratio you come up, right? But however, not everybody can do offering compromise. You have to be good in IRS system before we can go forward to offering compromise. For example, you must file all tax returns, made all the required estimated tax payment for the current year, and made all the required federal tax deposit for the current quarter if you are an employer, right? So you must be in good standing now in order you to do offering compromise to the past, your liability. Then that's the second solution. The third one, request IRS to delay collection and put you on non-collectible status. And I will tell you, I always tell, I hear myself telling my client this. And I said that if you have to owe somebody's money, the most reasonable debtor in our system is actually IRS. And they have this 10-year statutory limitation. They also go through a very rigorous process. And once they determine you are non-collectible, you don't hear anything, you live back to normal. Okay, they really keep their words for it. So in order to do that, you must file form 433. So there are 3 types of forms in here. I just want you to quickly understand what the difference. That 433A is a collection information statement for self-employed personnel and those earned wages. So they are the people who file Schedule C, Schedule E, and they have W-2. So they are small businesses, but sole proprietors, they do 433A. That's where they collect all your information, realize that, you know what, you can't afford it. So we put you on the non-collectible status. So that's how that happened. Then 433B is a tax collection information statement for businesses. So like S corporation, C corporation, partnership, and businesses. So they, maybe your business owes income tax, and then they will have you fill in 433B. That 433F is a general tax collection information, only 2 pages. So I really like 433F, but I tell you that in my 20-some years practice, I have really maybe 1 or 2 times the collection, IRS collection would give me for 33F is like a bonus. I only do 2 pages, but most of the time they give you A or B. So, but you don't need A and B if you don't owe taxes both on the business and the personal. So typically a taxpayer would just fill up one of those forms. And I will show you what form looks like as well. So, and here, oops, I actually accidentally stopped the screen share. So let me go back to screen share that again. I don't mean to stop it. I clicked the wrong button. Now, right here. So I want you to see this slide. So if you do not pay IRS, what happens? So let's say you owe and you didn't really, you don't have time for installment, you didn't make a payment, you didn't do installment, you certainly didn't do offering compromise, and you just kind of dropped. And you package your letters in the shoebox waiting for Ying to look at it. And I mean, whatever happened, you didn't do anything. And this is what could happen to you. So when IRS sent you that CP14 and with a QR code and you ignored it, you didn't do anything. The next thing they do, they send you another notice telling you that, you owe. And on that notice, it will say that intention to file lien. They will say intention to levy. So they will tell you that they are going to do it, okay? If you don't respond. So let's say you still didn't, let's say you didn't open that letter, you saved it for me and I didn't see it. And then you will be getting a notice of federal tax lien. What does that mean? That means that whatever property you have, for example, you have a house that you bought with your spouse and you owe taxes. Even better yet, like before you got married, you owe taxes. Then they filed federal lien on the property with your name. They don't care whether there's another person or not. So there you go. You got the lien, tax lien on that property. And then you ask me, so what? I still live here and nothing happened. That is so true. You still live there. Nothing happens. It's only going to bother you when you sell this property. So when you sell this property, supposedly you made $100,000, but you owe IRS $100,000. You're not going to see your money. It's going to go to IRS directly. Okay. Here, I also tell you that even if you filed bankruptcy, if that federal lien is already on your house, they do not take that away. Even though you filed bankruptcy, they don't collect anymore. But your federal lien, when it's filed, is filed. So that is a notice, pretty serious if you have property. And then they also send you notice of levy. What does that do? Notice of levy will be something that they can go to your bank account to take your money from your bank account. And a lot of people got surprised for that because notice of levy doesn't really mean anything. English is my second language. Sometimes some words I don't get it. And I never, this is just more of academically, of course I know levy related to them taking money from the bank. But if you just give me the word of levy and saying notice of levy, what do you think? If I'm not in my field, I don't know what that means. Levy, okay, you levy what? So levy your bank. So you will say that, well, IRS don't know my bank. Of course they do, because most of the bank will send to IRS, and let's say when you got an interest income, your bank account already with IRS. IRS has that income from the bank they filed for you. So when you file your taxes, you will write down the interest income. And if you have a mortgage, you already have the bank already know where your money goes. The money come out of your bank account to pay mortgage, right? So, or maybe you filed tax return, you were getting refunds, so you provided them with your information. And IRS says that they don't use that information to do anything. I'm not sure, I'm convinced that's the case, because I have seen cases where taxpayers' bank account just got levied, and which they didn't give any information. So whatever happened, or maybe they did give information they don't remember, right? So levy just means they're gonna take money out of your bank. Then they can also offset your refund. This year with pandemic, you know how we got the stimulus check? That one wasn't offset. And so even if you owe money and the IRS still send out the money, because that's not their money. And that is like FEMA money, and it is the money that just we are using IRS arm to pay to the taxpayer, and Trump said it's his money, so he just give money to IRS and the IRS send it to the taxpayer. So that is kind of that money, and it's not offsetting tax. But if you got tax refund and for 1 year, say goodbye to it before you file your taxes, because you're not going to see it. It will be taken to pay for the previous what you owe. So, and in this particular slide, I highlighted something and I reversed the black and white. So the background is black, the word is white, because I want you to see those words. 10-year statute limitations. What is that? That means by law, IRS will not collect after 10 years. So this means that IRS can attempt to collect your unpaid taxes for up to 10 years from the date they were assessed. From the date they were assessed, folks, not from the date you think you owe. Okay? And I will show you where to find that date. I will show you. Okay? And also, once the 10-year is up, IRS has to stop its collection. Okay? Every year there's millions. There's so many taxpayers. Their dues are expired. So let's say if you have, tax dues for many years, just be mindful. Those old ones might already expired, and IRS already take out of their collection list. So I think it is okay for you to take that out of your worry. Okay, so be really knowing what you are dealing with. There is a 10-year statutory of limitation. Now let's go to this slide. Then after this one, we go on to the website. I want to recap what we talked about, show you how to discover that expiration date for every tax due you have. Okay, now discharge through bankruptcy. How do you get rid of IRS debt through bankruptcy? So here, let's just simply read. You can wipe out your IRS income tax filing Chapter 7 bankruptcy. So we named the chapter. So Chapter 13 doesn't do different things. Chapter 11 doesn't do different things, but 7, you can wipe it out. So in order to wipe that out, these are things you must know. Number 1, tax has to be income tax. You can't do it for payroll taxes, and you can't do it for sales tax. Those are what we call the trust funds. Those are the money government asks you to collect and pay it to the government. You are just being trusted to handle that money. Is not your money. So those, you can't bankrupt that out. And that's why I always tell my folks that, well, you can do whatever you want, but come down to payroll, come down to sales tax, you need professional people to make sure it is done right, because that goes to the grave with you and you can't bankrupt it out. Okay, and you did not commit fraud and the willful evasion. So this is a determination that IRS will put on you if you did. And the way to look at that, you know, how did I know I am, did they think I was frauding or I was willful evasion or not? How do I know that? You know that because they will charge you civil penalty. So you will see that on your charges, and that is a signal, and you are doing wrong things. If they don't criminally prosecute you and they just charge you civil penalty, okay? So now, the third bullet point I have here is the debt is at least 3 years old, okay? So I give you an example here. If you filed 2019 tax return on April of 2020, like just right now, you filed it, and you owe $1 million taxes, you shouldn't be owing $1 million because our president only owes 750. So in 10 years time, I don't understand why our folks even, you know, have that issue. But let's say you owe $1 million. You can file bankruptcy and no, I didn't finish writing that. So 3 years. So I forgot to put in the years. So that 3 years is 2001, 2002, 2003, April 16. Just write that there for me. I forgot to write that out. So you can file bankruptcy on after April 15. So on the over April 16, 2023. Okay, so that's where the timeline is. And you must file a tax return. You file the return, not the government give you a substitute return that is not filed. Substitute tax return does not equal to your filed tax return. So you have to file your return and you pass the 240-day rule. What is that day rule? It means that the tax debt has to be there assessed by IRS for 240 days. So that's less than a year. Okay, so what does that mean? You know how you file taxes and then you say, oh, I owe this amount, and that is a self-assess, because when you submitted it to IRS and they take your tax return, before they accept that to their system, before you actually, the statutory limitation expires, which is another statutory limitation, 3 years, right? You file your taxes for 3 years, IRS don't come back to audit you. So when that happens, it is being assessed. So it's done. So that done date has to be 240 days and more. The reason we say that is because sometimes you filed the return, but IRS came back to audit you. Audit lasted for like 2 years, so your assessment was never done. So you need to know that your tax was accepted by IRS for more than 240 days already before you can file bankruptcy. Okay, bankruptcy, the last point, very, very important. Bankruptcy will not wipe out your prior recorded tax liens. Remember my slides? I'm going back there because it is so important for you to know. Remember I said that if you don't pay IRS, you could be sending a notice of federal lien. They can file a lien, right? Once that lien is filed, it's not coming out. But of course, it can come out. That's where after you made the payment and things like that, you want to make sure your lien is out. Because when you file bankruptcy, for example, a Chapter 7 bankruptcy will wipe out your personal obligations to pay IRS debt and prevent IRS from going after your bank account and wages. But if IRS recorded a tax lien on your property before you file bankruptcy, that lien will remain on the property. Okay, so that bankruptcy doesn't help to remove the tax lien. So kind of, I let you sink in that and understand what the bankruptcy is doing for you. And so know that it has to be income tax, knows that you cannot have a record of tax fraud, and know that it is, you have to file your taxes. The tax due has to be 3 years older before you can file, and the assessment has to be 240 days old, and then cannot be substitute return. And if you have tax lien on there, it's not going to come out with bankruptcy, even though you can get rid of the taxes. Okay, so that's where we are kind of covered everything related to my slide. But let me go to the website with you so you can look at what I got there for you. Just give me a second. Let me so what happened to my I need to find my slides right here. So now you are here with me, right? We're still sharing screens and you're looking at our website, but I want to go onto this place. Remember, if you owe IRS money and because you file taxes and you know, the taxes is actually, you file taxes, but taxes is not paid. So you can apply online for payment plan. Right now that CP14 has a QR code. It take you right here. So you can come here to pay. See, this is the button for pay. So this is where they want you to pay in full, okay? And then the next one I want to show you is this installment agreement request. And see, this is the form that you can fill in, installment agreement request. So you can put in your information, enter the total amount you owe, all right? And so if you have other additional balance, you can put in here. So this will just enter the date that you want to make your payment each month. You can put that in there. And you can even give them your bank number so they can draw that money out of you. Then you sign. And then this is where the questions come in. They're just really straightforward questions. For example, how many vehicles do you owe? A number, 1, 2, you know. So this is the payment. This is the request for installment agreement. Then we also have this, what we call additional information on payment plan. This is the site I want you to take a look, because in here, why do I owe interest and penalty? And you literally can expand that and they will give you an answer. So why do I have to pay a setup fee? So they will tell you, why do you have to pay a setup fee? And so this is where you can really get a lot of information. I always tell my folks that if you want information about taxes, go nowhere else but IRS site. And I agree, there's a lot of information, but if you come here often enough, and you will get used to the setting, and you will find things faster. But now you have the QR code, okay? And when you see the QR code and put your phone on there, it will lead you right over to what you need to do. They give you 3 options: pay in full, installment, and also taxpayer advocate. So that's the 3 options you have. And right here, this is the short form I was talking about, collection information statement. You only do 433 when you want to get to, you know, to get to the non-collectible status, and or with a lower collectible dollars than normal. So this is a special information collection form to give IRS information about you so you can pay less on installment. And you know IRS only have 10 years to collect it from you. So really, whatever you owe, they divide it by 120 months. That's the most they can get out of you. Why in your plus interest penalty, they need to add more. So you can tell they need you to pay that amount, not the one you give. So this is where the form 433F. Then you also have form 433A, which is for self-employed individual and wage earners, okay? And the 433B is for business. So the 3 of those forms are for the special negotiation on installment payment or non-pay status. Now here, I came over here because this is the collection process summary in IRS. So if you just go to IRS topic number 201, I mean, if you don't remember, you just type into collection, it will come here. And this is the news just came out. You can see this is October 9th. They just announced it, October 9th. And they are putting QR code on these forms. So that would give you a really convenient way to connect with IRS. And this is one very important information I brought over here for you. I really need you to look at this with me. And this is on IRS website. And the website place I'm on is about collection statute expiration. So I want to read details about what they do, how they do, but this is the thing that I want you to know. And if you cannot remember anything else, I want you to write down CSED, collection statute expiration date. When you call IRS, let's say you owe money. You owe them in 2018 sometimes. And you don't remember when you filed it, and you don't remember whether you were assessed in 19 or you haven't even been assessed, and you just don't remember anything. But you want to know when that tax due going to expire. You pick up the phone, you call IRS. You give them your ID, you give them your information. You will ask, what is my CSED date? Then the person say, what do you mean by that? You will say, there is a code you can see, I do not have, and it is called a CSED code. You give me that code, tell me on that code it has a date. Can you tell me what that is? So that's a collection statute expiration date. It will tell you exactly when that debt will drop out of the earth. Okay, so that's the information. A lot of times when clients come to us with all these shoebox of information, we look at the notice, it's from 2002. You know, why are you still bothered with it? Expired in 2012, but maybe not. Maybe some stupid people filed an amendment last year. Okay, so people are doing things really, I don't have a word for it. English is my second language. So I want to use some word that, you know, president used, but I don't think I'm qualified. So let's just not use it. I just think that you, as a taxpayer, you need to take charge of what you have. So when you go to a person to help you, and you should already have that date. You should tell Ying that I already find out my 2002 tax due is still there because I filed extension in 2010. Okay, I filed amendment in 2010. So I amended, but the amendment got rejected. So they finally assessed me in 2015. That means it's not going to expire until 2025, right? So this is where that understanding comes. And I hope this is a really useful short webinar for everything about IRS collection. IRS uses third-party collector to collect on you as well. And do you know that when you pick up that phone, you could tell them that I would not like third party to collect on my balance, and then the third party people will give that back to IRS. And so I come across one taxpayer got collected by the third party. It was really annoying. And so we made the request. So it goes back to IRS. I don't know that practice is very successful or not. Haven't really heard a lot of feedback in where I am on that committee. So if I have anything to update, I'll update you. But if you have any recommendations to make IRS a better IRS, and you can also talk to me, I'll bring that issue up and making good things happen to all of us, not to just one person in the country, right? There you go. And I have my time up, and I appreciate your staying here. I'm going over 10 minutes already, and I will see you again on Saturday. Bye-bye.